Hello all, welcome to the platform for investor education. In this clip, I want to talk to you about the framework for evaluating investment opportunities. Us Indians are very frugal people and we have a very high savings rate. The framework which I'm about to describe to you, which is a pyramid-like framework, is the way to understand how to evaluate different investment opportunities. Most of us humans have invested in the bottom rung of that pyramid, and that too usually to its right. Of course, depending on our age, education and other factors, some of us may be at various other points on this pyramid than others, but it is always best to start at the beginning and to remember that investing in knowledge gives you the best returns. At the bottom of the pyramid are bank deposits, which Indians overwhelmingly prefer. These are usually referred to as cash assets. Even in this, Indians prefer short-term bank deposits. Moving from right to left along the bottom rung of the pyramid, you would be locking up your money for longer periods of time and will not have access to it quickly. This is decreasing liquidity, as is shown below the bottom arrow. Along with that, of course, comes less safety as well. But will the bank really collapse? Above that bottom arrow, one sees the potential for increased income. If you invest for longer periods, there are higher risks. For now, our notion of risk is simply how much the rate of return can change over time. Therefore, would you not want to be compensated for that higher risk by increased income? Even if you are offered that increased income by a higher interest rate for longer-term deposits, consider whether that extra income is enough to compensate you for that extra risk of locking up your money for a longer time. This balance between risk and reward has one other component that is mentioned on the top of the arrow to the right of the pyramid. This is the risk of loss of purchasing power or inflation. Suppose inflation in India runs at about 6% per year. It has been higher than this in the past. What does it mean? It means that prices of the things that one typically buys and consumes are going up at about 6% per year. You must ask yourself what it means to earn 6% on a one-year fixed deposit only to use all that extra money earned to simply buy the same things you could have bought 1 year earlier. Just above cash assets are bonds, with government bonds being the least risky and hence offering the lowest return, and corporate bonds being riskier. This is because companies can and sometimes do default on their interest payments, while one does not expect governments to. Even though they do sometimes delay making those payments, India does not have a well-developed corporate bond market, but there is considerable activity in government bonds, and investors can moreover participate in both through mutual funds. Indeed, even as Indians are being seduced by the relentless advertising of mutual funds Sahi Hai, this chart from AMFI clearly shows that the growth in equity mutual funds is slower than in debt funds, which is what we call the cash and bond asset classes. On the pyramid above the bond asset, you have the choices of investing for growth/appreciation of capital. The arrow on the left shows you that the risk of loss of capital comes along with the potential for increased reward. Again, starting from the right of the pyramid, precious metals and gold, while a little less risky than stocks and real estate, are still a little more risky than fixed deposits. Risk here means that their prices fluctuate more over time and do not stay fixed. India's fascination with gold has a long history. For centuries, it has been the way in which Indian women have managed to secure some assets for themselves. Notice also that in the metals category there are classes of risk as well. Bullion usually means gold or silver, but can also mean other precious metals like platinum. Bullion is measured in terms of the weight of that particular metal in the bullion coin. You could also buy gold coins or, still more risky, invest in stocks of companies that mine gold. To sum up, we were investigating and evaluating investment opportunities at the bottom half of the pyramid we just showed you. In our next video, we will look at those opportunities from the top half of the pyramid. Until then, please remember that investing in knowledge is the best way to enhance your wealth creation. Thank you.